All right, welcome, guys. Thank you so much for joining. How many's in the chat? Nine. Looks like 9 people in the chat. So, just to get started, I think I'm going to go through everyone's questions in the Telegram. So, if you have any questions, just leave them on the Telegram chat, not in the YouTube comments, because I'll just be reading from the Telegram from my phone. So, let me just take a quick look here. So, all right, let's start from the top. So, KS, you said, will we get a heads up when the bear market comes? If not, then how do we prepare for it? That's a really good question. So let's start the stream off with how you need to be ready for a bear market. Basically, that's a really good question, and it's a very tough and honestly nuanced question to answer, because it's predicting a top in the market is probably the most difficult part. You know, predicting a bottom isn't too difficult, but finding a top in a parabolic bull market is very difficult. It's very hard. And to be honest, unless you have a lot of money, you're never going to be able to exactly predict the top. Because a price top is made when a big whale or a big institution decides to finally sell their position, and they basically make the top in the price. You know, the top doesn't just happen for any random reason. It happens because someone makes a top. And so, you know, us in this group, I'm assuming none of us are billionaires. I mean, I don't think any of us are. But just say there was a billionaire in the group, that person has total control over the extent to which this bull market goes to. Because if they were to sell most of their position, they could basically crash the market and cause a top and cause the cascade of liquidations and people selling and all this stuff to cause like a nightmare scenario and make things crash. So knowing that, how do you prepare for a bear market? So you have to ask yourself, what would cause a bear market? And to me, the scenario which would most likely cause a bear market is if the Federal Reserve was to raise interest rates. So let's analyze what I mean by that. So let's look at the S&P 500. Obviously, everyone knows this is one of the indexes for the stock market. Has a lot of the top, you know, basically the top stocks in it. It's just an index, an ETF. And if you see here, you can see that there's a very clear sort of cycle here. Let's go to the monthly. There's a very clear cycle. And so what happens is, this is just basic stuff. You have a bull market, bear market, bull market, bear market, bull market. And so the Federal Reserve can control the interest rates in a market to dictate how much they want people to spend, how much they want people to borrow, and they can make people more risk on or risk off with their money based off of interest rates and a series of other factors, but just interest rates for now. So basically, when the market is like this and we're in a huge, you know, a big bull market here, you know, the price this index went from like just under $500 in 1995 up here to 5 years later, hitting 1500. So that's 4 stocks, you know, the main index tripling in price that's a pretty big return. And so during this period here, you'll find that the Federal Reserve was probably raising interest rates in order to help control the extent to which things were going up. So when the markets are going up, the Federal Reserve typically is a bit more conservative with their fiscal and monetary policy. They might print less money, they might lower interest rates, they might raise interest rates, they might do a series of things. And when the market goes shit, that's when they begin to lower interest rates to encourage spending. You know, if the interest rate is lower, that means that people can borrow more money now. And because they can borrow more money, they can do more risky things and they can invest more. And so, yeah, market declines, we get lower interest rates, people spend more, that pushes, you know, the economy back up. Oh, we're getting too overheated here, raise interest rates, back down. We got to lower interest rates now. And it's that same cycle repeated over. So the issue we have now is that the issue is not interest rates right now. The issue is money printing. Now, if you look at the M2 money supply, I think they've actually deleted it. Oh, here we are. The M2 money supply, which is basically I think it's all the circulating, I'm not quite sure exactly, but it's the circulating currency of the US dollar, whether it's paper currency or just digital, like the number. But this is basically all the money in circulation of the US dollar here. And so if we look back if we look at the entire history here, the past, 1980, the past 40 years, we see like a general sloping uptrend, and we're getting slowly faster and faster. And what we have here, when did it start? March 2020, start of Corona, start of when everything went to shit. We have money printing going absolutely vertical. Money printing just goes vertical. And so what that means is basically that because the fear of the coronavirus and the impact that it has on everything, the government has had to respond with printing a lot of money to help maintain the stability of the economy. Because if Corona, because Corona happened, lockdowns happen, everyone, like heaps of people lose their jobs, people spend less money, that's a really negative impact on the economy. And what that leads to is lower prices of assets, and it could lead to like a financial crisis, it could lead to a depression. And so the Federal Reserve and like the government and everyone wants to avoid that, because an economy that is just always going up is an economy of happy people and a good society. If you look at the economies of countries where they have stock markets that have tended sideways to down for the past 10 to 20 years, I think Japan has that actually, those countries are they're nowhere near as a nice country to live in, as opposed to one which feels like, everything's going up, everything's getting better, even though it might not be actually. And so money printing going vertical, what does that mean? So let me write this down. Why is money, and I'm sorry if the keyboard's noisy, I'm still getting a new mic to fix this issue up. Actually, I won't write it down because it's too noisy. So the question is, why is money printing an effect on the economy? So think about it. We have a population of 7-8 billion people, and all of those people have a relatively same amount of money. When the government prints money, every single person in the US or wherever they're printing the money, they all get a share of this money that's printed. And so every single person who gets this money is technically wealthier, because before they had the money, they had a certain amount of wealth, and now after the money printing, they're now richer. I think they did a $1,400 stimulus in the US, I think it was a while ago. So every single person who got that is $1,400 richer than they were before they had it. And so what that means is every single person on paper is richer. But in obviously the concept of supply and demand, if there is a fixed amount of goods or services, but there is an increased demand for these goods and services, obviously the price of these goods and services is going to rise to reflect the increase in demand. And so obviously if we have more money in the economy for the same amount of goods, the price of these goods are going to go up. So with crypto, how it works is we have more money wanting to buy the same amount of Bitcoin or the same amount of Ethereum. And so that means that naturally the price of Ethereum and Bitcoin are going to go up a lot. So this is why we've had such a big bull market. It's because all this money's printed and it basically gets pushed into all these like stocks and buying things like groceries and paying for accommodation and buying cars, and everything goes up in price, and a big recipient of that is crypto. So how do we tie this back into a bear market, and how do we know when to predict a top in the bear market? So when the Federal Reserve pulls back the money printing press and they stop printing and they raise interest rates is when we want to look to pull out of our investments. Because when you think about it, this rally is driven by the printing that these governments have done due to the fear that the coronavirus has brought on the entire human population. Now, when lockdowns end, when the vaccines come out, when everyone starts traveling and spending money, there's no need to print more money because everyone's spending and the economy's good and everything's going up, and we're going to get massive inflation because if you look at the average savings rate of the average American household, the savings rate has increased exponentially over this corona period. The average American has way more savings now than they had before the pandemic. And so that doesn't mean that all these Americans are richer. They're not any richer. The value of their currency has just gone down and they have more of it to reflect that. So these Americans have all these savings, and what are they going to do with their savings when the world opens up? And I'm just picking on Americans, but it is for the rest of the world as well. What are these people going to do when they've been trapped for 12 months? They're going to go out, they're going to spend money, they're going to go traveling, they're going to buy cool shit, they're going to go flex and buy Gucci apparel or like Rolex watches, they're going to buy all this stupid stuff. And it's going to push the prices of all these things up dramatically. And so the Federal Reserve has a mandate where they have to keep interest rates at 2 to 3% a year. And yes, they can go slightly above or below because they've been below the 2 to 3% mandate for a long time now. And so going slightly above is okay because they've been below it for a while. But we're not talking 2 to 3 or 4% inflation from this money printing. We're probably talking 10 to 20 to 30% inflation from all this money that's been printed. And that is not a sustainable level of inflation that they're willing to withstand, because when the inflation of an economy hits those levels, it really impacts everyone. You know, imagine you're earning a wage and you make $20 an hour, and those US dollars that you made are now worth 20% less 1 year later. You technically make 20% less for every hour that you still work. And so they don't want that to happen, obviously. So how do you stop inflation? That's what they're going to ask themselves. And there's two main ways to do this. The one main way is to raise interest rates. Raising interest rates causes people to borrow less and spend less. And when people spend less, the price of things go down. Now, the other way is money printing. If they print less money, that means there's less inflation of new currency, which means that there's not as much of this money being printed, which was just going to be used to spend on goods and services. It sort of just pulls back the level of inflation as well. So what are we looking for? We're looking for the Federal Reserve to raise interest rates and to stop money printing, or to at least see signs of heavy inflation in the economy and see that as a sign that, okay, the Fed is probably going to start looking to hike interest rates soon, because this is inevitable. This is not something that's potentially going to happen. Inflation, to this extent, is inevitable. And it's going to happen very shortly or in the not so distant future. And so what we have to do is we have to make the most of what we have now, which is an amazing bull market, but be prepared to know that there's going to come a time where prices crash a lot. And that doesn't mean that the world's over and we never invest again. That just means that we take good profits and we wait to get back into the market once all the shit has gone over. Maybe it takes 6 to 12 months or so, that sort of thing. So let's go to the next question and I'll have a look at the YouTube comments. All right. Geez, there's only 13 on the live stream. It's not much at all. All right, next question. What is the best preferred way to recognize support on a chart? Possible to use with S, support resistance, flip trades, or just in... I don't know what that means, really. I'll just stick to the first part. What is the best way to recognize support on a chart? All right, let's do some technical analysis. Okay. Okay, so these are my indicators. These are all my indicators here. We've got, okay, I'll tell you the main ones. BitMEX funding and premium index. What else we got? Moving average. I like moving average. OBV is good. RSI is good. Volume is good. And that looks like it. So when you draw support and resistance, the higher of a time frame, the more accurate. So if I go to the minute time frame, and I go, okay, that's a resistance level. It's meaningless. That's not resistance because it's on the minute time frame. No one goes on the minute time frame and who has serious capital and looks to buy or sell based off this. They go on the daily time frame. So let's go to the daily. Now, your question, how do you analyze support and resistance? It depends on what you're trading. If I'm trading Bitcoin, Fibonacci retracements and extensions are very useful. Every single one of these retracements in the bull market, what have I done? Every single one of these retracements in the bull market pulled back to the 0.5 to 0.618 fib level. So let me show you what I mean. Fib retracement, I just went into here, fib retracement, draw from the bottom, draw to the top. Why does it do that? Yeah. Yep, so as you can see here, 0.5 to 0.618. Let's draw the next one. Yep, 0.5, wicked into it. Let's do from here to here. Ah, it didn't work. Fuck me, it's so annoying. Alright, yep, 0.618 again. This one doesn't really count because it went below it, this next one. But I mean, it'll probably still work a little bit. Let's delete. Yep, so as you can see here, came down into it. So I drew it from here to here. Yeah, it didn't really work on that one, but it went below it anyway, so it doesn't count. But these three, as you can see, this one we drew from here up to here, came back to the 0.618 fib. So on Bitcoin, you want to use Fibonacci retracements. It's a really good tool. And you want to stick to the high time frames like the daily. Those are really good. Let's look at Ethereum. Yeah, nice. All right, let's do the next question. How does Mercurial Finance IDO work? If we deposit 200 USDC on Radium, will we get for sure 200 USDC equivalent of MER? Okay, so when you stake Ray for the MER IDO, that gets you an allocation to submit your 200 USDC. Now, there is a fixed amount of coins that can be given, and those coins are given at a specified price. And the only variable that changes is the amount of capital that is looking to buy these tokens at this fixed price. So if you have more people looking to buy the same amount of tokens for the same price, those tokens get spread evenly between that capital, regardless of if it's $1 billion or $10, it gets spread evenly. So if this MER IDO is oversubscribed, that means that the people who put their money into it get less than what they get less than the full $200 allocation, because there is more people than what would be the even trade. So for example, if there was 200,000 coins and they were selling for $1 each, so that means that $200,000 of USDC, if it was input, would get an equal amount of those coins. But if there was 400,000 USDC instead, that would mean that those same amount of coins are spread out at the same price, except it's halved. So you put in 200 USDC, you get only 100 USDC worth of coins, and you get the other 100 USDC back. And what is a dynamic vault? I have not a clue. What does minted mean? Not a clue. Is Shiba Inu the next Doge? No, because Doge is Doge, and nothing will beat Doge because Elon supports it. Thoughts on the Binance Smart Chain / Uniswap madness? We all know they are popping up shitcoins, hundreds of shitcoins popping, but I don't know if there are really any benefits about it, apart from incoming liquidation. I don't know. It's just a gambling cesspool of degenerates. Like it's generally it's just like if you want to go to the casino with your boys and drop $100 on like a horse race. Like it's the exact same thing. You drop 100 on some shitcoin named Shibu, and you either make nothing or you make a lot of money. So if you want to play short-term games with short-term people, you might make a bit of money, but it's not sustainable, and it's also not a skill that is directly applicable to any other area of your life. So if you might make a bit of money off some shitcoin, but it doesn't actually help you with anything. So how much of your portfolio will you keep approaching the bear market? Honestly, I'm going to keep all of my money in crypto, but it just means it's going to be in US dollars instead, and I'm going to be lending it for some interest. I don't really have, I mean, unless I'm spending it, but I don't really have any reason to take the money out of crypto. Like, I think this financial system makes a lot more sense to me than the one with banks. And I'm just asking myself, why would I want my money in a bank? Like, what are they going to do with it? Lend it for 0.5% interest a year? Like, that's shit. I don't want that. Do you think Litecoin is still very bullish? All right, let's have a look at Litecoin. Let's have a look at the Litecoin. Oh yeah, chart looks good. So this was a trade actually we did in VIP. How'd we go? Almost hit take profit too. So first off, what would I do? I draw here. Let's draw that line. And just like that. Yeah, it looks, honestly, it looks fine. It's just consolidating. Like, yeah. So one thing you want to remember is that you never sell a coin that enters price discovery. And what is price discovery? Price discovery is when it obviously gets above the all-time high. Now, obviously the wick is here at 420, but that's on Coinbase. If we go to Kraken, it's at 370. So we're already at all-time highs on this other exchange. Now let's look at this on the weekly. What do we have? We have price closing the weekly above the top wick resistance, and we have price now hovering just directly above the wick. That's really bullish. 3-day, same thing, looks good. Daily, just consolidating, looks fine. Yep, it looks fine. Honestly, like if it dips further, just, I don't know, maybe I'd... Honestly, I'd probably buy some there in the red box. Like, that'd be a good spot to buy some. All right, next question. Tips and tricks to navigate on current market situation right now. Bitcoin slowing down, NASDAQ down, but BTC dominates at the all-time low. It's not at the all-time low just yet, I don't think. Oh, shit, it dropped a lot. Oh, yeah. Yeah, it's still got a bit to go. So remember, you can trade Bitcoin dominance chart. It actually responds to support and resistance and everything really well. I don't know how, but it just does. So honestly, like there looks like support. Next support here. Ah, shit. Next support here. So yeah, honestly, it has a lot more room to drop. Like there's no real key level there. Maybe there's a fib thing I can draw here. Alright, let's do a fib. Oh, I fucked that up, didn't I? Alright, let's draw this. 0.786. Ooh, where are we hitting now? Like around there, was it? Okay, so we're below it. Yeah, so honestly, like, it could go a lot lower here. And with DeFi heading up, like, it could just... Like, we could just end up heading into a longer alt season. Like, it could just keep pumping, really. Like, Ethereum still has room to run. Like, this is not a bearish chart. This is not bearish. Oh, what was that? Mouse just went big. This is not a bearish chart at all. Like, that's very bullish. The thing you need to remember with parabolic runs is price always goes higher than anyone imagines. And this is a perfect parabola, if you look at it. Delete that. Honestly, it's just sloping up like it's insane. And it has the momentum behind it to sustain it. Now, let's draw this. Obviously, you can draw it to fit your bias, but yeah, you get what I mean. It's a parabola. All right, let's take a look at these. In continuation, what is your view on Bitcoin dominance? Do you see it falling further, or do you see it further falling is good or bad for alts? Because below 40 and it could burst the market as well instead of helping alts. If Bitcoin keeps going sideways and Bitcoin dominance keeps going down, that's bullish for altcoins. If Bitcoin dumps, and that would probably if Bitcoin dumps, that'd probably raise Bitcoin dominance, because alts go down. Alts are what you call a higher beta Bitcoin, and that means they go up more when Bitcoin goes up and they go down more when Bitcoin goes down. So if Bitcoin goes sideways, alts go up. If Bitcoin goes up, alts, I mean, it depends. They can go up, down, or sideways. If Bitcoin goes down, pretty much always alts go down. Like, on a big enough dump, alts always go down more so. So yeah, if Bitcoin dumps, then Bitcoin dominance is going to go up because alts are going to dump more. So I don't want to see Bitcoin dump. I want to see it go sideways. And I want it just to chill here for a bit longer. All right, let's take a look at these YouTube comments. MA versus SMA, what should we be more emphasis? Just use moving average, don't use small moving average or whatever it means. In such parabolic runs like F, how do you manage profit booking? How do you make sure to take decent profits yet not lose? Well, it's a good question. You'll just have to draw some sort of fib extensions and just take profits along the way. So you go like this. Bottom, top, bottom. Let's see if it worked. All right, so that worked. Okay, that worked there. Yep, perfect. Nothing. Yep, worked here. Sort of. Oh, it didn't work there at all. Oh, it worked as support. Yeah, so this is what I would do. You look at the fib extensions, and you take profit these fib. This is really the only way. Psychological numbers like 10,000, 5,000, like big psychological numbers, that's one way. And fib extensions is another way. Also, we can go on the F Bitcoin chart. And what we can do is this actually works quite well. Is we can go, get rid of that. Fib retracement. You can draw it from here. Pass it. 1 second. You can draw it like this. And this can help give us some take profit levels. So what I would say is this is the take profit level. This is the take profit region right here. This is where I would look to rotate out of Ethereum and either into Bitcoin or into USDT. Because think of it this way, Ethereum is the index for the altcoin market. When
Ethereum pumps, alts pump. When Ethereum dumps, alts dump generally. Because Ethereum is like the ETF almost. It's like the index of altcoins. Because all the alts are, most of the alts are built on Ethereum. So to predict an altcoin top, you have to look at Ethereum and where Ethereum is going to top. And this is the golden pocket. Golden pockets are very reliable, and we actually have confluence with this trade because confluence is a very important thing in your trades. We have a very crucial swing high resistance level right here. Let's get the pen out. Right here. And yeah, that's about it for that one. So just this region. And also 0.1, huge psychological resistance. 0.1, everyone keeps talking about it. Where is it? Right here. Yeah. So what you might do is you might go, all right, let's take some profit when we hit here. Let's take a bit more up here, take some here, and take some here. And we'll hold a little bit just in case we blow straight through and go up to here. And then I might take some more off. So I hope that answers that question for you. All right, might do one more question and then head off because it's getting late here. All right. No more questions. Yeah, I think that's it. I'll give everyone, I know the stream is delayed, so I'll give you guys a minute to write any more questions. And if no more questions come through, I'll just finish it up here. If one comes through, I'll give it an answer. So give you guys a minute. Hey Richard, how you going? Let's go to let's just look at some charts. Honestly, this is so bullish. Like this chart, I know it's messy, but like it's wiki, but that's a really nice chart. It's just showing like new all-time highs. Like this is the sort of setup where, wow, this is the sort of setup where you can just expect this candle just go up. It looks ready to pop. I think we had one question come through. Let's have a look. In the bear market, how we accumulate wealth. Okay. Very simple formula. All right, this is my 4-step bear market strategy. Very simple. The thing with crypto is you have to keep it really simple. The simplest strategies are the best ones. So look, step 1, find 5 to 10 good coins. Find some really smart people in the space, like the top 10 smartest crypto people. Find what coins they have. Find the ones that have a narrative and a meme sort of attached to it that will likely become popular in the future, because you're not really investing in a project. What you're investing in is the narrative and sort of the idea behind it, the concept. And so you want to sort of try to predict what is the future narratives going to be in crypto? Now, 2 years ago, you would have said, okay, there's some decentralized exchanges trying to take off. All right, there's some smart people. All right, let me look at the smartest guys investing, creating this stuff, and let's try to figure out a game plan. So you would have looked and searched for the best decentralized exchanges, and you would have come across Uniswap, because the guy who made Uniswap is a very, very smart, very talented guy. If you watch all his YouTube videos where he's on stage at different conferences and stuff, he's very smart. And you would have gone, look, Uniswap, they're one of the leading projects. They've got a huge war chest of capital. They've got a big support in the community. All right, I'm just going to buy this coin. I'm going to buy a little bit each week, and I'm just going to let them develop and build out their ecosystem and give them time to figure out how are they going to make it scalable and useful. And if you just did that, you would have made a fuck ton of money. And also, Uni's different, because I know Uniswap was an airdrop, and that was gifted to people who used the network. But the example of picking a good coin and buying it still, is the idea, even though this example is a little bit different. So let's look at another good project. Honestly, it doesn't even have to be a good project. It could just be one that has a nice team, and you just keep accumulating. Like, what's this coin? Let's go on here. This coin called Telcoin. This one's up like 200x, I think. Ridiculous. Yeah, insane. So I remember this came out in 2017, and it had a lot of hype, and it literally went down for how long? Went down for this is when it was released. It went down for its entire history. And now look at it. In the space of what? January 1st till now. So in the space of fucking 4 or 5 months, it's retraced its entire 3-year bear market. Plus, it's up. How much is it up from its all-time high? That's ridiculous. It's insane. So from the bottom, it's up. Yep. Yeah, it's up 38,000%. And if you were to look at the chart here, you would not have thought that was going to happen. But this is how crypto works. You just have to find projects that you like. Don't care what the price does of the token. As long as it's a good project, good team, you know it's eventually going to go up. Just keep investing in it, because it's a bear market. Keep building your income and your cash flow. Don't pay too much attention to trading or anything like that. And don't sell early either. Just hold all that shit. Just hold it. And yeah, you'll make a heap of money. That's basically it. I'm going to finish the stream up here. This is a good spot to finish. So thank you everyone for coming along, whoever made it. I think it was only 15 people, so I guess I only did post it in the VIP, but yeah, hope you all learned something, and thank you for the really good questions. They were some pretty good questions this time. So yeah, I'll finish it up here. Talk soon, guys.